No one ever really gets rich by having their money sit in their bank account. Hi guys, welcome back to my channel. My name is Sanjna and I talk all things Australian personal finance. So that's things like real estate, cryptocurrency, NFTs, budgeting, and as of recent, I have delved into the world of stocks and ETFs. So if that's something of interest to you, then please do subscribe to my channel down below and be sure to follow me over on Instagram and TikTok. Now, let's get started with today's video. So when we think about investing today in today's terms, it means so much more than just investing into stocks and real estate, the traditional forms of investing. We have now seen the surge in cryptocurrency, NFTs, explode over the last 5 years or so. We are seeing more of the Gen Z and millennial age groups invest into cryptocurrency and NFTs and steer clear from stocks and real estate. And obviously we see, obviously my parents, your parents, they're still investing in the traditional way, which is ETFs, stocks and real estate, which is not a problem. But the problem is if you're not investing in any of these asset classes, you are definitely missing out because the rate of inflation is actually rising higher than the amount of money that you've got in your account. And that money that you've got in your account is actually being eaten away because of inflation. So if you've got your money sitting in a bank account, you're actually losing money day by day because these asset classes can provide you with passive income and growth and boost your income over time. The important thing to note here is to obviously understand what each of these asset classes involve and obviously doing your research. Also, just wanted to preface that this is not financial advice. So in this video, I wanted to talk through stocks, cryptocurrency and real estate investing, and let's just compare the three. Also, this video is sponsored by SwiftX. I will be talking about SwiftX a little bit later on in this video. So let's talk about stocks. Now, stocks is essentially a way for you to earn passive income by investing your money. Now, for example, if you invest your money into stocks for Tesla, so when Tesla reveal their profits for the year or their quarter, then if they've made $5 billion or $500 billion rather, then that means you will get a small piece of the pie of their profit. And that is what's called dividends. Now, dividends are paid out quarterly. Now, this is a little bit different to cryptocurrency in that when you stake your cryptocurrency, that's also earning a passive income. Those are actually paid out daily to you, and I do this with SwiftX, which I will talk a little bit about later on. Now, if you don't want to invest in individual stocks and perform your research about individual stocks, because this can be really tough to really understand and educate and do your research on, then you are able to invest in index funds or ETFs. Now, ETFs are just a basket of shares, and there are many options to choose from. But if you are investing in stocks, you need to understand that you need to hold your stocks for a longer period of time for you to actually see the growth with stocks. Now, the rate of return with stocks really does vary. It can be anywhere between negative numbers to even up to 10%, even up to 30%. It really does fluctuate, but the average return is about 6, 7, 8%. The downside to investing in stocks is that you only have a certain window in which you can actually invest your money because the stock market around the world closes at a particular time. Here in Australia, the stock market opens at 10 a.m. and closes at 4 p.m. But not only that, stocks are only available on limited exchanges, and therefore this could lead to more manipulation, like we all heard with Robinhood shutting down. A lot of people in the US use Robinhood, and because that shut down, they were not able to access their money. And generally the fees associated with stock investing are much higher than the fees associated with cryptocurrency. In terms of utility as to what you actually get out of that investment for a stock, it's really not much. It's just a piece of paper just to say that you've got that stock. There's no real utility associated with it. Now, if we compare that to cryptocurrency, there actually is. But before we jump into cryptocurrency, I just wanted to mention that SwiftX is my preferred trading platform for cryptocurrency. It's a platform that I personally use and have been using for quite some time now. So if you want to get involved with cryptocurrency and you're a beginner, then definitely recommend SwiftX because I have a demo feature on their website and also on their phone application as well, which is super easy to use. If you're a beginner and you're wanting to learn more about cryptocurrency, you can play around with dummy money money. The fees are also lower as well compared to other cryptocurrency exchanges. And the process of actually setting up an account with SwiftX is super easy. They also review their cryptocurrency, which they have available, so their asset list, and they're constantly reviewing this to make sure that they add new cryptocurrency onto their exchange. And not only that, you're able to obviously stake your cryptocurrency as well, and that's something that I've personally done just to earn passive income and earn staking rewards. Now, I've created videos on how you can create an account with SwiftX, how to stake on SwiftX, how to use the phone application. I'll be leaving all of those videos down in the description box, so be sure to check that out. So of course, if you wanted to get started, then definitely click the link down in the description box below, because that will give you $20 worth of free Bitcoin just by signing up. Now, with cryptocurrency, we have obviously seen the price of Bitcoin skyrocket over the years, and especially in the last 12 to 18 months. Bitcoin is now seen as a store of value and is slowly taking over gold. So Bitcoin is considered the digital gold in today's era. The best thing about cryptocurrency is that the markets do not close. So you are able to trade, you are able to buy and sell cryptocurrency 24/7, 24 hours of the day, 7 days a week, whenever you like. Now, this can also be a pro but a con as well, because there are different time zones in the world and you may not know what's happened overnight to your cryptocurrency until you wake up. And the pro is obviously that there is endless opportunity to make money. Cryptocurrency is available on many different exchanges around the world. It's not limited to a few stock exchanges across the globe, so there is less manipulation involved. Generally, the fees are also lower as well with cryptocurrency. I know with SwiftX, they've got one of the lowest fees around at just 0.6%. In terms of cryptocurrency, you actually also get some form of utility as well associated with your purchase. It offers real interest generating products such as loans. You're able to make payments, and as of recent, NFTs have obviously emerged off of the blockchain technology as well. And of course, there is the option of staking as well. And this is a way that the rich always get richer, because they invest a lot of their money, they earn passive income, and then they reinvest it again. So they are always becoming richer over time. There is obviously volatility involved with cryptocurrency as compared to other assets, but that also does mean high risk, high reward. But as long as you do your research and implement a method that I personally use, which is dollar cost averaging, DCA, as long as you've got more time in the market than actually timing the market, then you can actually take advantage of the different cycles that occur within cryptocurrency, as you can also do with stocks as well. Personally, I believe that blockchain technology, cryptocurrency, NFTs are the way of the future, even though we are seeing volatility and the market is down at the time of recording this video. But I personally do see a future, and I feel like this is the way that the universe is actually headed. Now, let's move on to real estate. Now, with real estate, obviously there is always going to be demand with real estate because people need to live somewhere. And with real estate, you're able to generate passive income through your rental income. The only catch is that you need a deposit. And this is probably the only con associated with real estate investing, in that you need a larger deposit to enter the market, as compared to cryptocurrency and stocks. You don't need so much to actually enter the market. You can actually start investing with $500, as compared to having a deposit of about $40,000 to $50,000 for real estate investing. The great thing about real estate investing is that it is leveraged money, and this is something I've spoken about a lot on my channel before, and that essentially is that when you purchase real estate, the bank is actually giving you free money to purchase your real estate or your land and your property. And what you can do is, once that's appreciated over time, you're able to actually leverage the equity that you've already built up in the first property to then purchase your second property or your third property, and you're essentially using the bank's money, borrowed money, to purchase more real estate. And this is something that I personally do, because why not? It's free money. The other thing to note as well with real estate investing is that the process of actually acquiring your real estate can be very lengthy. The process can take up to 2 months for you to actually secure your property. As compared to stock investing and cryptocurrency investing, it's almost instant. What you can do if you're not really comfortable with investing into real estate, you can actually get into an ETF called REITs, R-E-I-T-S, and you are able to actually get second-degree exposure to real estate investing. Now, how do you actually identify where to put your money and where to actually start? Personally, for me, I would recommend investing in all 3 asset classes just because each of them have their own pros and cons, and you don't want to miss out. You want to be able to diversify your portfolio, and you obviously want to benefit from the highs of all of these asset classes. So personally, if I was new to the investing world, I would start off with stock investing just because there is limited risk involved, and then work your way into cryptocurrency where there is a little bit more volatility. Once you understand stock investing, then cryptocurrency investing is the next level up. Obviously, there is a bit more volatility and you need to be comfortable with that, and think about holding long term, think about dollar cost averaging. Employing these methods will definitely make it a lot more comfortable for you. And then once you've done that and you've generated, passive income, and then once you've got enough money saved up in your account, you are then able to purchase real estate. So I think that would be the plan if I was getting involved into investing for the first time. I definitely think that it's the way to go because we all know with inflation rising, you are losing money and you're not going to become rich by having your money sit in your bank account. No one is rich by having their money sit in their bank account, so don't do it, unless of course you want to be poor. So if you want to follow me over on my journey, then be sure to follow me over on my Instagram account and my TikTok account, Success by Sanjna, and I will catch you guys in my next video. Thanks, guys.